pretty much on expected lines. We, of course, have Nikunj in the studio to make sense of that. And then we are joined by a battery of guests as well. Mr. Nilesh Shah joins us from Kotak, Mr. R. Gandhi, the former RBI Deputy Governor, Radhika Rao from DBS, as well as Mr. Ashutosh Khajuria joining us from Federal Bank to help us understand what is the key message coming in from the government this time around. Nilesh, we'll start with you. You think that this would be pretty much on expected lines and the market should be cheerful that perhaps now a rate cut is on the anvil and no more talk of rate hikes? Nilesh, I think we'll have to unmute yourself.
Undoubtedly, the RBI policy is as per the expectations of the market. It almost reminds me of Sunil Gavaskar, the legendary opening batsman. No matter what the attack was, he was standing there without fear. In a very challenging global environment, RBI has navigated Indian economy. After scoring a century, Gavaskar used to take a fresh stance so that he can restart his inning. The same thing RBI is doing after scoring a century and navigating Indian economy in post-COVID crisis. They are still reassessing and ensuring that everything is balanced between growth and inflation. So this is Main Hoon Na policy for RBI, very, very reassuring to the markets.
Is that markets are now kissing distance away from an all-time high. I'm talking about the equity markets here. Mr. Gandhi, 7 out of 10 concerns have got addressed. But some concerns where the Reserve Bank of India has referred to the obvious. One is second half inflation coming back and the impact of monsoon. Do you think Reserve Bank of India somewhere has underestimated the impact of delayed monsoon and the fact that cereal prices have already shot up in the last couple of days? Could that really backfire in the second half?
No, we cannot straight away come to that conclusion because especially monsoon-related updates have been received late. So that is one reason. And possibly the impact is also on long period average. The forecast is about 96%, give or plus or minus 4%. So that way, monsoon's predictability has always been an issue. That's why Reserve Bank is cautious about that. Whether that is underestimating, I will not say, because always Reserve Bank had kept 2 important considerations among its forecast. One is about oil price and other is about monsoon. Because Indian economy has always been very, very dependent on these 2 factors. So I won't say it is an underestimate.
Okay, just wanted to take a look at the markets as well because the Nifty, as we pointed out, is just kissing distance away from that all-time high level, 120 points away. And it's the power stocks which are doing quite well today. I'm guessing the auto stocks would also be making merry given the fact that rate sensitives are likely to react positively, whether it's the NBFC space, the banking space, etc. as well. But let me welcome on board Radhika as well. And Radhika, what about the fact that GDP estimate has been unchanged at 6.5%? Is that realistic for you? And inflation has been brought down with respect to the estimates at 5.1%. A word on that?
Hi, good afternoon. Certainly, I think what we have in the inflation projections is kind of a Goldilocks situation. When we have seen the GDP forecast being maintained at about 6.5%, and like you rightly mentioned, the inflation dialed down by a bit. I think the inflation adjustment is merely statistical because of the sharp reduction in the first quarter. So basically April to June quarter GDP, inflation is going to be at least 60 basis points below what the central bank had earlier projected. So that arithmetically brings down, fiscal 24 numbers. And I think that's the adjustment that's been made. But if you hear the narrative from the central bank, they're very clear that while inflation is back in the tolerance band, it's higher than where they would like it to be, which is closer to 4%. So our own forecasts at this point are a bit lower on inflation and a bit lower on GDP as compared to where the central bank numbers are. But I think the inflation growth mix that they have highlighted in the commentary certainly backs the stance that they prefer to keep on hold. And I think what has changed between April and this meeting, and in fact in the just past couple of of days is that the Australian Weather Agency has now turned up the probability of an El Nino phenomena, and I think that's playing on the policymakers' mind, as well as generally other global central banks again reacting to their inflation being much more sticky. I think against this backdrop, against the growth inflation mix that's been drawn out by the commentary, the decision to keep on hold in terms of rates as well as a stance is something we had expected as well. It certainly is the right way forward for the time being.
Ashutosh, do you think Reserve Bank of India estimates both for growth and inflation, they could pleasantly surprise us? Growth could be higher and inflation could be lower. That's what Radhika, I think, is referring to. What is your sense?
I think Radhika has put it up very well. That projection for all the 4 quarters, Q1 to Q4, barring Q1, where the big figure is 4.6, the remaining are still 5%. When we are talking of the trajectory, we are looking at Q2, Q3, and Q4. RBI's estimation about inflation is still 5+. And he emphasized and said that in his speech that 4 is our target, 5 is not our target. So I think
We'll just interject you there. There seems to be a bit of a technical glitch. We can't hear you properly. We'll reconnect that line. But in the meantime, Nilesh, let me come back to you. The governor also talked about the fact how the FPI flows have turned favorable, and that's being led by equity. Do you think that phenomenon is likely to continue given the stability that we have seen in the Indian economy? Nilesh, the question is for you.
The Indian equity markets today provide 3G, a better growth than our peer group, better governance than our peer group, and more importantly, better commitment to environmental than our peer group. The FPIs are likely to keep in mind this 3G of growth, governance, and green while allocating money to India. Surprisingly, global investment is still underweight India in relation to as a percentage of our GDP. So my feeling is that at every lower level, FPIs will remain a buyer. More importantly, they probably have also learned a lesson. In most emerging market, entry is easy and exit is difficult. In India, exit is easy. Between October 21 and June 22, you could take out $35 billion worth of equity. But entry is difficult. Markets have almost reached to the level of October 21, when the FPI buying is probably just around 1/3 or 40% of what they have sold.
Okay, so that's the take coming in. India offers that 3G, and that's going to be the case going forward as well. I'm not sure if you've patched the line with Mr. Khajuria as well, because he was completing his point. Yes, please, Mr. Khajuria, go ahead.
So that I think in his projection for the next 4 quarters, governor had, the Reserve Bank of India's estimate is for Q2, Q3, and Q4 all in 5+ trajectory. I mean, it's only for first quarter where they're talking about 4.6, and he emphasized by saying that our target is 4%, not 5%. So naturally, when you see in Q2, Q3, Q4, the projections are 5+, with big figure being 5. I think the process continues, and this could be one of the reasons why that withdrawal of accommodation stance still continues. And as Radhika had rightly put up, that I think oil still, weather and oil, these two factors, two risks still prevail. The probability of El Nino developing is increasing day by day. This is, I don't know whether it is directly linked or not, but delay in monsoon already is being observed because normally in Kerala, we used to see it on 1st of June, and it has not yet hit. So I think that's one factor. And the second, of course, is the oil-related uncertainties. Saudi Arabia going on, on that spree of cutting their production or so. How much does it impact is to be seen. So, because of these two reasons, probably the stance of withdrawal of accommodation and was, of course, is a continuation of that. So they would be closely watching the numbers, and based on that, the further action may be taken. And they very clearly mentioned that it is not the pivot, it's just a pause.
Why India is giving 3G, but who uses 3G? 5G rollout हो रहा है. What is the 5G moment for India?
So निकुंज भाई, दुनिया में भले 5G आ रहा है, अपनी ये 3G भी FPI इसके लिए काफी है, बिकॉज दूसरी मार्केट में तो 1G और 2G भी नहीं है.
वहां पे तो फोन ही नहीं चलता है, लाइन डिस्कनेक्ट हो गई है.
In Russian market, there is line disconnection. In Brazilian and South African market, there is a lot of disturbance. And unlike Mr. Khajuria's line, those lines are not likely to get repaired very soon.
But the problem with 5G is that there is a Geo moment in India. So what is that moment in India, Nilesh bhai?
I think the biggest movement, Nikunj bhai, is the participation of domestic investors. I mean, as mutual funds, we manage just $500 billion collectively. That's less than the current account balance or savings account balance in banking system. Clearly, there is a need to increase financialization of savings. And slowly and steadily, we are seeing SIP becoming 401k for Indians. Today, a large part of American savings is directed productively towards financial savings thanks to 401k plan. In India, we are doing kind of market 401k plan via systematic investment plan. So our geo movement is the domestic participation in the market.
Mr. Gandhi, where do you think Reserve Bank of India is optimistic in their assumptions?
Optimistic, yes. One, of course, the inflation trajectory, while Reserve Bank was always has always been very, very wary of inflation. But the way you put it at optimistic, that is because the Q3, Q4 estimate remains the same as it was predicted or forecast earlier. So that period, there we have to see how far the El Nino effect and other things can impact, because Reserve Bank will be able to forecast in the near period. There is a Q1 and Q2 of every time more closely, because the data points will be more firm. So that is why those forecasts typically will be good. But the later period, there could be some impact that we have to see. So, but Reserve Bank will be very quick the moment further data comes in, and they will obviously revise its forecast as and when new data comes in.
Okay, so that's the take coming in of what is optimistic. Just wanted to highlight the 10-year yields continues to be around that 7.00. There was a bit of a spike that came in, but just continue to remain settled around that. Though the Indian markets are firing away on all cylinders at this point of time. So the Nifty, as we pointed out, just 100 points shy of that live high level, and the Bank Nifty now just 50 points away from making a fresh high as well. Radhika, wanted to bring you back into the discussion. The conversation now seems to have stepped away from rate hike cycle to rate cut cycle. A large part of the street believes we are likely to see that by the end of the year itself. What's your assumption?
Certainly, I think the central bank's words about pivot and pause at the last policy review, as well as this one, are being watched very closely. I think a pivot towards easing needs a couple of things. It needs extreme confidence on the inflation trajectory, and it needs very clear signs that growth is slowing down quite sharply. I think both on both these fronts, I don't think we have real confidence at this point. I think growth is it's had a good first quarter of 2023. That's the last quarter of fiscal 23. And as we go into April, May, high frequency numbers are still showing that they're holding up. I don't think they're flying away, but they're still holding up, which essentially means that you're going to see a pretty strong outturn for this quarter as well. Now, keeping in mind that even at 6%, which is our forecast, or 6.5%, that's the central bank's forecast, the fiscal 24 growth number is going to be among quite strong as compared to many developing countries. I mean, I also look at ASEAN, and you can see ASEAN countries as well. We don't expect many of these countries to produce this kind of growth number. So growth is likely to be firmer. inflation, like we lightly discussed, it's got a band of uncertainty around it. So I think till such time there is confidence on both these fronts, I don't think we're going to see a very imminent pivot towards easing. And at the same time, externally, what you're seeing is that the big discussion on Fed and its Fed funds rate likely to be even higher than where they are at this point is another bone of contention for many central banks. So I think it's the path of least resistance, at least for us, would be that the central bank, prefers to keep on hold. Perhaps a meeting or two down the line changes the stance to neutral, but I don't think, we are not of the view that within this calendar year, we are going to see a pivot towards easing. I think if anything, it's going to be a 2024 story.
Okay, so that rate cut is going to be a 2024 story only. But Mr. Khajuria, as far as the banking system is concerned, do you think the transmission has happened with respect to the rate hikes completely? What's your sense of where the deposit rates, lending rates are likely to trend? Because recently we read a report that the bank loan rates have actually petered off after increasing for 11 consecutive months.
You're absolutely right. I think the peak has already been seen. I don't see further hike in rates, both on the deposit side as well as on lending side, because the transmission has been almost complete.
So Nilesh bhai, we go back to that second point, which is that financials as a category, they always benefit when the rate cycle starts initially, because the deposits are repriced later than their loans. Now that we are in a benign interest rate cycle, NIMs have peaked out. Do you think for the banking sector per se, we are behind the peak growth in profitability is over?
Undoubtedly, Nikunj bhai, the growth in profitability on a base of 2 lakh crore plus profits of banking system will not be as good as what we had seen, say, last year. Sometime back, Nifty 50 companies' total profit was 50,000 crore. Now, State Bank of India alone made 50,000 crore profit. So on that kind of base to sustain growth will be very, very difficult. But please remember that apart from NIM, what matters for banking system is also NPAs and provisioning. Fortunately, on that side, despite having a reasonably low level of NPAs in Indian banking system, there is no dark cloud visible. It looks like that the credit growth will remain in double digit and NPAs will continue to remain in low single digit. So while the profit growth will slow down, it will still be positive. It will still be probably in line with the expectations of the market.
Sustaining the growth rate over the higher base is going to be a bit of a challenge. The growth rate, nonetheless, will continue to be quite positive. Mr. Gandhi, wanted to bring you into the discussion. You talked about what is RBI optimistic about, but what are the risks on the anvil? Do you think monsoon can really play a spoilsport, or is it only a niggling worry at this point of time? And is there anything else as well which you're watching out for?
Okay. Monsoon, of course, every time there is variation in the monsoon, it affects the inflationary expectation. That is where the difficulty starts in. But if you look at the way the country has implemented large-scale and minor irrigation projects, and year after year, the food grain production has been keeping by records after records. So in effect, on the ground, the impact of monsoon failure or a little less than expected ones is not going to be difficult. It will be manageable. That's why even though sentimentally and more kind of optics-wise, monsoon could have an impact, on the real grounds, it is unlikely to be impacting a lot.
So, Mr. Gandhi, is there reason now to also start talking about the base effect? Because there is a lukewarm recovery in rural India. If you look at job losses, given what's happening in the startup world, IT, the job losses are there, job creation is slowing down. Inflation has eaten into a lot of, semi-urban middle class sending power. How come nobody is really focusing on all that aspect?
See, with the rural areas, if you look at the rural agriculture credit, rural credit that has picked up last year, then the latest report given by the Reserve Bank, it clearly indicates that it has grown at 15%. That is a very strong growth in terms of rural credit in recent times. And in the GDP records also, you will find that agriculture has been growing well. So that way, rural demand is likely to be sustainable. And the rural employment is the way the other day, again, there was a data point that almost 84% of the NREGA payment have been paid through direct means, direct benefit transfers. So that continuously, it is giving more liquidity in the hands of the people who spend. So by that way, you will find that rural credit should be picking up in the coming year as well, in the current fiscal as well. So that's why I don't think rural demand is going to be faltering or anything. It is unlikely. The other indicators which have been continuously being watched by Reserve Bank about the rural demand is also showing up positive signs.
Radhika, closing comments from you. Last word is yours. Last time's credit policy was more like a bolt out of the blue, where the Reserve Bank of India, despite the global tumultuous environment, did not increase rates. Do you think today's credit policy is more like a no event, and it is simply an endorsement of path and the path forward, given that the path was well defined in April policy?
Sorry, is that for me?
That's right, Radhika. Last word is always yours. Last word is always yours, Radhika. How can you forget that?
Certainly. I hope I heard the question right, because there's some disturbance on the line.
I'm happy to ask you again. Let me ask you again. Last credit policy, the April credit policy, was more like a bolt out of the blue. Reserve Bank of India did not increase rates despite the global pressures. Do you think today's credit policy is more like a no event, but also an endorsement of one step forward in the path which was defined in April?
Certainly, like you rightly mentioned, April's meeting was, more unexpected, at least for the consensus. And I think between now and that pivot that might come on next year, according to us, the meetings in between will, I think the nuance in this language, in their priority list, what their view was in inflation, all of that will be watched very closely by the central bank. And I do think that a stance change will be coming, but I think this is only after they gain much more clarity on the inflation outlook. Unlikely to be in a hurry, and I think they have shown time and again that they believe in preemptive, prudent policy making rather than reversing in a turn. And just to broaden the scope, I think we have also seen that amongst quite a few of the Asian central banks, excluding China, some of the ASEAN central banks in particular, most of them have, only barring one, all of them have started to signal that they want to keep an eye on what's happening globally, what the global central banks are doing. They don't want to follow them, but at least want to just keep an eye and to see what the spillover impact is on our FX, on our markets, and on all these grounds. I think India is very well protected, very well buffered. So I don't think in either way there is pressure from the central bank to move in a hurry.
Okay, there's no pressure to move in a hurry on either direction. That's the final word coming in from Radhika. But on that note, we'll thank all of you for joining us. Nilesh, Mr. Gandhi, Mr. Khajuria, as well as Radhika. Thank you so much for making time and helping us decode what was the thought process that the RBI governor had behind his decision not to keep the rates unchanged at this point of time. But with that, we're wrapping up the special edition of the RBI coverage. Thank you so much for tuning in.
Rajesh.